Hello and welcome to a brand new show of Market Makers. The month of November has been a month of extraordinary volatility for Indian markets. Exactly on Diwali day, we celebrated a new high on the index. But after that, it's been a one-way street for benchmark indices. Nifty is down more than 300 points and Sensex has taken a knock of about 5%. Tapering concerns are coming to fore once again and rupee seems to have assumed its decline. Risk versus reward. How are things stacked up for Indian markets, and is the current leg of decline more like a blessing in disguise and more like a buying opportunity for those who missed the bus? Which are some of the key stocks one should focus on, and in terms of pecking order, which sectors now offer value? Let's discuss all that with Pathik Gandotra. Pathik, good to have you back on ET Now. Thank you for joining us.
Thank you.
We celebrated a new high on the Diwali day. Yeah. It looks like we celebrated early.
I don't know. Yeah, maybe for the time being, but I think I don't think the market is done for the year. So I think you might actually retest that high in as much as next month itself. So our view is that this is a very healthy correction. It is very important for the market to correct after a 1300 point rally. It was very natural and important for the market to correct. Otherwise, then you risk forming a bubble and a deeper crash. So we think this is happening absolutely in order. And it's a very, very, very welcome correction. And in this time, one should actually go and start accumulating stocks.
So you don't think we have a top in place for the year?
You know, actually, let me correct myself. I don't know whether the top will be taken out this year or early next year. But I don't think we have a top in place at all.
Price appreciation has been quite dramatic. We've seen a classic V from the August low, from the September beginning. Are markets pricing in too much of recovery? Is there a froth in the system?
I would put it the other way around. I think the markets were pricing in too much of a disaster when they were pricing it, when the market went to 5100. Because if you remember the conversations at that time, rupee was 68, it's going to go to 70, 100. I heard a number of 100 as well. And then, from everywhere, interest rates went at 9.25. Technical analysts were going amok. This chart looks like it's going to go to 12%. What will the government do? What will happen? How will we arrest this? Because nothing was happening. Gold imports were not even coming down. And when India was acting to hike short-term interest rates, hike gold imports, that was being construed as capital controls. So anything that you did was wrong. And that's the price that you got. So that was, in a way, that bottom itself was not called for. So beyond 5,500, whatever market went down was not called for, was just panic. So from 5,500, you're at 5,900 today. So it's not as if you've come up majorly, is what I'm trying to say. The froth is also out. The froth is out from the bottom also. Again, if you see today, you again see people saying, hey, taper is back. Fed will taper. Rupee is again going to go to 65, 70 maybe. Again, your interest rates are already at 9%. God knows where they will go. Economic growth is not growing. So market will crash. So that is what, again, people are, a picture that was being painted. But I don't think, and at least I do not subscribe to that view.
Fair point. So the favorite game on the street is everybody is trying to guess the tapering calendar.
Yeah.
The pure suspicion that tapering could be advanced has led to a synchronized selling in emerging markets, emerging market equities and emerging market currencies. My fear is what happens when tapering eventually starts.
Just see what happened just before the fall. There's a mad rally in emerging markets all through September and October. If you have seen that, I also think emerging markets have also corrected from the rally that was happening, because at a point in time, the dollar index had touched 78, 79, and it was said it's going to go to 75. So the dollar index was falling. And so people are saying now the whole thing has changed completely. The whole export benefit is going to go away. So, ideally what's happening? There's a lot of leverage in the market globally. People latch on to one trend and take it to its extreme. The trend turns, they take it to the extreme on the other way. So it's not a very easy market to trade in. It's a very easy market to invest in if you buy the dips, is what I would suggest. Now on the tapering calendar, just imagine, the Fed has actually been buying $85 billion of bonds every month. Okay, it's been doing that progressively against all criticism, against the fact that, hey guys, your bond buying is not working. There's no growth happening. Now for the first time, we saw growth actually coming back. Do you think they'll go and scuttle the thing so early? If somebody has taken on $1 trillion of debt in what is called QE3, close to $1 trillion, he's not going to let go for another $500 billion, $700 billion. He can easily take that because he has to ensure that the agenda is met. If the agenda is not met, the tapering is not coming off. It is not coming off. And one jobs data definitely does not tell me that it's going to come off. Because I have also seen people have started focusing on the broad data. I think there's a reason that was required for the huge bubble in the emerging markets, huge run in the emerging markets. So they got the reason. If you see, business confidence is not exactly in good shape. If you see, hiring by SMEs in US is not in good shape. So it's not as if things are going to change in a manner which is very soon. It is definitely on the calendar. My best bet would be it will be June of next year. That's what I think.
Fair point. So let's keep all the tapering fears aside. Let's talk about absolute growth, absolute earnings growth. Is it a good advice to buy into any asset class when earnings are not accelerating, when earnings are contracting, and we are nowhere close to an economic bottom? For the moment, the liquidity signals are blowing strong. Everyone is happy, everyone is excited, but eventually earnings have to catch up, and they are not catching.
By a correction, so if you look at the quarter of this year, it was supposed to be the most disastrous quarter, right? Q2 of September, because growth was all gone, rupee had gone in some other direction. Actually, it's been one of the best quarters for this year.
Because expectations were low. On a net basis, it's not a big gungo quarter.
I understand that. The point is, so first of all, it beat expectations.
Okay.
If you look at growth rate, where did growth come from? It came from all exporters, one. Two, it came from good quality companies, good quality cyclicals. You also saw growth there. So when does the recovery begin? First, the good things grow first, right? The large companies start doing better. Exporters do well because your rupee has appreciated. So I put it in this manner. We have created a huge competitive disadvantage in our country by all our policy paralysis, as you call it, and high interest rates. That has made a competitive disadvantage to us, because what's happening is that people don't want to do business in India. Indian entrepreneurs want to do business outside, and so that disadvantage has to be cured by only one thing. Your currency has to depreciate. The currency has depreciated. So you're now back to being at least competitive in the global market. So once you're back to being in the global market competitive, that's what starts the next round of growth. What happened in 91? The same thing happened in 91. You were under a licensed Raj at that time, and your currency was hugely, maybe overvalued. So once the currency depreciation was unleashed, there's a big depreciation happened once, and then the first thing that grew was exports, and then everything else followed. So the first thing that is growing is exports. It's there before you. Third month of consecutive growth in exports. IT is not looking like it's going to stop. Look at the commentary from every IT company. They are saying growth is robust. Nobody is saying that, hey, I have seen any sign of any slowdown. Actually, they are saying the signs of accelerating growth. So, I mean, you are on your track to grow. Exports will grow first. Then you'll have some growth in some cyclical industries. Maybe monsoon-based, the rural economy will grow next, and then things will fall in place. The government is spending. That's the truth, right? Government has started spending clearly. PSUs have started spending. Government has started spending. So some people will benefit from this spending. Those will grow third. So I think one by one, all your growth engines are being put into place. Nothing is going to happen in a hurry. It will take time.
Just like a coin has two sides, a story has two takes. Are you putting your money where your mouth is? Are you fully invested, or are you waiting for better entry points to put your capital to work?
So we have invested whenever we've seen, in whichever sector we've seen a crash. So we have invested.
So at the current juncture, are you a table thumping bull?
Absolutely.
So how are you allocating capital?
So today, our capital is employed significantly in IT companies where we are bullish, and I don't buy the argument there of people saying that currency is going to depreciate and so appreciate, and so the IT bull run is over. I don't think so at all, because I think that Indian companies respond more to dollar revenue growth than to just the rupee. The rupee is a factor, but dollar revenue growth is also very important. So as long as our companies show strong dollar revenue growth, the stocks will keep on doing well. The rupee will depend upon the euphoria in the stocks. If rupee appreciates, then maybe there will be less euphoria, but I think the stocks will continue to do well. Secondly, like I said, we don't expect the rupee to appreciate majorly. We expect the rupee to be between 60 and 62, in that range. Because beyond that, then your recovery gets hit. No governor, no government would want now the rupee to appreciate back to 57, 58. I don't think that's happening in a hurry. And so IT companies, for some more time, let me put it this way, for the next 6 to 12 months, depending upon what valuation they reached, are still decent place.
So you don't think IT is a crowded trade?
I don't think so.
Even the stocks are up more than 50-60% in the last 1 year.
I still don't think so. And actually, if you see, they've been consolidating now for quite some time. They haven't gone anywhere for the last 2-3 months. I mean, they've all been in the same range, except for a few one odd company which must have done very well. But other than that, they are more or less. Infosys done 8-10% more. TCS has actually come off 10%. Wipro is somewhere near there only. So they're consolidating. I think they're getting ready for the next leg up.
But Midcap IT has appreciated after numbers. Is that where you want to? Is that a space where you want to associate yourself with?
No, we do a trade in both mid-cap and large cap. I would be comfortable in IT kind of industry to still invest in large cap. Mid-cap very selectively.
Is Infosys still the big story for large cap IT watches?
Infosys, and I also think Wipro.
Why do you like Wipro? Because so far they have not delivered.
Correct.
They're growing
exactly the kind of company we like. Exactly the kind of company.
So you're confident that growth will come back?
Exactly.
So you're not focusing on BFSI? Why do you think growth will come back for them?
No, so growth will start coming back in BFSI as we get to hear, as they speak in investor forums, and so I think growth there will start coming back in BFSI. I think Wipro, see, it's like this, something is going below par. It's come to now industry level. At least it is decently, you can compare it at some level with the industry for this quarter. It's going to get, if they have guided for growth in December, which is better than all the industry, all industry has guided, leave alone TCS. But so I think the gap between them and average industry growth will continue to narrow, and eventually it might accelerate as well. I'm not even saying that. I'm just saying that by 6 months from now, they might start growing at industry growth rate. There's a huge value to that. The stock has consolidated for the last 8-9 years. If you look at the way, it has not gone anywhere. I mean, it's performed very well this year. But if you look at the big picture, Infosys and TCS were the two. Infosys and Wipro were the two companies which are leaders, right? In this time, 10 years back. Now they are nowhere. Now they are not the leaders anymore. They are new leaders which have emerged. So I think both these companies are trying to get their act in place, either today or tomorrow or a couple of quarters here and there. I think they will get their act in place. And the way the business is being run in both these companies, we are very confident of growth there. So we bet on both the companies.